Thank you. I have alerted my friends that I would be raising an objection on the record and a solution for my objection. I have sat through this morning listening to some evidence, and I observe that parts of Professor Smart's testimony and parts of his slide deck, one, touch upon subjects that are not canvassed in his experts' reports, or are evidence that is different than that contained in the experts' reports, or provides new charts or graphs not in the reports, such as on slide 14 of 161. I wanted to alert the court and our friends to our concern, and first to encourage them to identify and produce to us those parts of the slide deck or of any new evidence that they desire to lead that is not in the reports. If they could let us know in advance if they know what it is. And my solution is, no matter what they do in terms of letting us know, my plan is to do our best to deal with any new material in cross-examination. But depending on how that goes, if we feel that we need to make an application, bring additional evidence by way of a rebuttal, we would make that application in due course. I think that's the most practical way to deal with what is what would be evidence on subjects not canvassed in the existing reports. And if there's too far of a stray, I might stand up again, but it's my hope I'll be able to deal with it in cross-examination and the new areas. Oh.
Okay, and the first, your subparagraph A of your solution?
Oh, was to invite Ontario to just alert us to the new material.
On what timing?
I was hoping overnight.
Overnight, okay.
Right. I mean, if there's new material that they feel is important for their case, they can tell us. If there's a new spin with different graphs, they can just identify where it is. And indeed, if there is, even if there's new evidence that is on subjects that are not canvassed in the reports, if they know they're going to be leading it, they should let us know.
And you say, or evidence, not necessarily in the slide deck so far.
Not necessarily in the slide deck, but if there are certain areas that they want to go into a new subject area, which I think they already have, okay, they should just alert us to that, and we'll see how we can deal with it.
Your Honor, we take the same position that Mr. Schachter has just articulated.
Thank you.
And I'm hoping that's not going to be too onerous.
Okay. And Mr. Hahn? I take it you have some advance notice of this objection.
We were raised of the general objection. We weren't given any specifics to hear my friend right now. So obviously we have a different opinion. We don't believe Mr. Smart has gone into any new subjects in respect to the second category, different than reports. Professor Smart has identified the corrections to his numbers. I don't know if that's the detail.
So sorry, you use the word subjects.
Right.
Do you think that's where the issue is?
I'm using the same word that my friend just used.
New subjects?
He says subjects not canvassed in reports.
Okay.
And then as for new charts, I mean, yes, he has used the same information from his reports, and he's sometimes have a new graphic, same as Mr. Hutchins or Stiglitz did with their gold bars and everything. So it's not new information, he's just presented in a different way. I think the fairest way to do this, if there's specific objections to my friends, just identify which slides and we can address them, rather than this reverse onus approach where we're going through our own deck trying to second guess ourselves. That's difficult.
Well, you would certainly know if there's a new chart, in like we're on slide 20. You would know if there are, out of 161, if there are new charts, for instance.
Yeah, of the three, that's probably the easiest.
Right, that's
task.
easiest. And you say there are no new subjects and there is no evidence that's different than in the report,
Well,
to
as
your
I said-
knowledge, except the correction.
Right, because we don't have any other detail from my friends about it, right? If he can identify. if-
But you're not aware of any, is what you're saying.
aside from corrections, that Professor Smart is identifying or has identified.
Okay. Okay, so, but you don't have a problem identifying any new charts and giving them a list of which
I
ones
think that
those
one
are?
can be done, Your Honor.
Okay. So let's see if Mr. Schachter has some
Yeah, it's,
examples.
yeah, it's not the new numbers that are generated that I'm objecting to.
Right,
It's things like on slide 18 of 161, where the witness talks about a depletion of resource stocks and resource exhaustion as being a reason for negative NCRRs. I don't believe that's in his report at all. So, I mean, how important that will be, I don't know yet, but it is a new area that is not in his reports. And, my intention would be to cross-examine the witness who's not in the courtroom on that and those areas. And to see if, if it's in the slide here, he must think it's relevant. Ontario must think it's relevant if it's in the slide deck to highlight to the court, but I don't believe it's in the reports. And that's when I tried to find it, and I stood up in the middle of the testimony just to find out what Sec X meant. You might
Mhm,
remember?
yes.
And I found section X, and I can't find that evidence there. Can't find it at figure 1, and I couldn't find it after doing a Control F. Just Control F. Control F, where you do a search on the reports for those keywords. So I thought I didn't memorize his report verbatim, but it struck me as something that might be new.
And so you went looking for it and didn't find it there. Okay,
So that's just an example.
all right. How does that sound, Mr. Hall?
Again, I thank my friend for some more information about what the actual objection is, but he should outline exactly which portions of which slides there is a problem with. As to the charts, we could probably identify those, but we'd be happy to respond to each one of any list. Any problem with the-
Well, I think what you're saying, if I can, you're saying, as far as you know, there's nothing new. Right?
Right.
And so, but it's quite possible the witness, Professor Smart, can further identify, because the way I understood him, he was preparing his slides and preparing for today, possibly last night or the weekend, like in the most recent days. And he may have a better sense. He may have a sense. And unless Mr. Schachter has a comment on this, I would ask you to ask him if he has identified in the making of his slides, something that he has put in his slides that does not come directly from the report. Now, in the normal course, we would not highlight for a witness their area of cross-examination. And Mr. Schachter says, well, he could just cross-examine, and you would say that as well. So I'm asking Mr. Schachter, is that something you'd prefer? If counsel says they don't see anything new, and your first ask was whether counsel could identify for you what was new. Counsel says, I don't see anything new, but my question is, does the witness have a more nuanced appreciation of what he has put in his slides?
Yeah, I would leave that for the court. I mean, the most important person to be is the court should get the answers it wants. For the purposes of my cross-examination, if my friends don't want to aren't able to do it, I would just leave it for cross-examination myself.
It's the beginning of a slippery slope if you start telling the witness what
Yeah,
to expect on cross-examination. Or what you've highlighted. Of course, they can tell them what to expect generally, but not something council
Yeah.
has already.
I mean, I'm sort of giving it up on this issue right here, but I figured I would do it as an example. Rather,
Yes,
rather than the court thinking that there isn't anything there, or my friends not realizing there's stuff there.
so it's, a couple things come to my mind. One, you've got a team here, Mr. Hong, you can ask people to take a close look at all of the slides tonight and put their own minds to whether there's anything new there, so that you can double check against your own reports to see if there is anything new and highlight it. With respect to charts, I don't, when you say that's no different than what Mr. Hutchings did, it's not that it's not that there's no name calling about it. It's just that it's new, and could you identify them? Okay, and maybe they're not so obvious as with pink and red. Maybe there's other ways that they're new. So if you could do that, that would be helpful. And otherwise, I think we are where we are, which is that anything that is not identified that comes out obviously will be the subject of cross-examination, and maybe that is something to build into time budgets or time estimates. So it may be that it wasn't anticipated.
Okay, I made a note of
How does
those.
that sound?
Yes.
You're good. Okay.
That sounds fine.
Okay. So everybody's got homework. All right, thank you. And just this discussion, you may be in discussions with your own witness over the next couple of days, but this discussion obviously should not form part of it. Thank you. Foster. Is he here?
I think he went to
Yes.
I think he was waiting in the lounge.
Your Honor, he's just upstairs in the faculty lounge, and the title wrong. Bailiff, sheriff is just retrieving.
He came down earlier. We told him to wait outside. So
What is the correct title?
CSO. It's very bureaucratic. Court Services
I
Officer.
used to regulate bailiffs, so that's what.
it's like night court.
The magnet. Good afternoon, sir.
Afternoon, Professor.
Good afternoon.
So I just want to pick up something that happened right before lunch. We were on slide 20. You were talking about the 56.899 billion. And the court asked you a couple questions, and you said I'm just paraphrasing that, the majority of that is interest, I think that was said. And you said about, I think you said estimated 10% was the nominals, CRs that you said. Okay, so I'm trying to hopefully clear this up.
Yes,
What we have is Exhibit 12. This is an exhibit filed by David Hutchings on February 21st. If you go to the third slide. Yeah, I mean, I don't know if you've seen this, but I'm just pulling this out because this is the evidence he filed, or he amended the numbers on that day. And I recall, as you see in the first row, first column, Hutchins NCRR nominal 1.043 billion. You see that? The number ring a bell to you?
sorry, which number?
The Hutchins NCRR, the first row,
Yes,
and the first column, he lists nominal
yes,
1.043. See that?
yes, I do see it, and I have seen this table before. In that sense, it rings a bell.
Okay, so maybe just clear this up. To me, 1.043 isn't 10% of 56.9 billion.
It's about 2%. I can't verify these numbers. The number of 10% that I offered before was an attempt at a conservative estimation in my own right. I'm not saying that this number is wrong, nor that I regard the difference between 2% and 10% in this context as consequential. I would accept this number provisionally, but I would prefer to perform the calculation more carefully and see if I agree.
Thank you. I just want to make sure we're talking about the same thing. Nominal, Hutchings, NCR figures.
As far as I know, we are, but I would have to review his work papers in detail and reconcile my approximation of 10% earlier with what I see in this table now.
Okay, so just so that I understand what's just happened, you look at this chart, Exhibit 12, you look at Mr. Hutchings' nominal versus his, what is that called? What's the 56 called? That's with interest, right?
Yes,
The
that's the
56 is
60.
with interest. And you say it's 2%. Whereas you estimated about 10% was nominal and 90% was present, was with present, or was the present value adjustment. But you say the difference between 2 and 10 in these numbers is not consequential.
In this context, it's not. I
Okay.
believed until now it was about 10%. Mr. Hong's asking me questions based on what I think is a slide from the demonstratives of Mr. Hutchings, but you haven't told me. That's my belief.
Okay.
That says that it's 2%. Either one of those is consistent with my statement, which is that interest is most of this case. And that's all I wanted to say in that statement. If it's, I mean, I simply will, whether we talk about this again or not, I'm going to go and replicate the calculation in the slide you're displaying to me now or not. But I don't regard that distinction as important for the purposes, the point that I was trying to make, which is that particularly when Mr. Hutchings calculates it and arrives at $56.9 billion, a very large portion of what he's doing is interest rather than principal. And so the interest rates are important. That's the point that I made. It's true if principal is 10% and therefore interest is 90%. It's obviously still true if interest is 98% instead.
Thanks for clearing that up. So I think we're moving on to slide 21. Pull that up. Okay. Can you explain to the court what we have here?
Yes, thank you. So the next two slides simply conclude what I wanted to say by way of summary and introduction to my testimony. And we have covered most of the substantive issues here. So I propose to be brief on these two slides, except for when Mr. Hong slows me down. I want to point out that Professor Baudouin and I received a copy of a document that for us was labeled as Exhibit A1, which we understand was provided by the plaintiffs. And it was titled Summary of Experts, experts' opinions. And it purported to be a summary of our opinion among other economic experts in this case. And we believe that in that document, the plaintiffs misinterpreted our opinion on augmentation and on sharing in several very important ways. I want to take a minute to set the record straight. And so, if I may, there are 2 points to be made. The first is the second bullet on this slide. In footnote 1 of that document, they state that we propose that the Anishinaabe annuitants should receive a share of NCRs equal to 1%. I believe that's the only interpretation of what they wrote. In fact, we consider many different shares. We have our own preferred sharing model, as I said before lunch, which is based on risk-adjusted value. I'll describe it in much more detail, but it is not a 1% share. It is a variable share from year to year, as I said, and that share starts at 100% of NCRs in the year 1850. It declines in a systematic way. That share declines in a systematic way over time, and it does fall only gradually to about 1% in the last year of our data. Here I wrote 2020, perhaps 2019 would be more accurate, but it falls from 100% to 1%. To characterize it as a 1% share is dramatically incorrect. The average share over those years is much higher than 1%. That's the first point. Even if one were to wish to substitute a single number to represent the varying shares that we use, 1% could not be a representative such number. That's just incorrect. The second thing is that the shares decline over time. And that means that the smallest shares, the ones approaching 1%, perhaps reaching 1% by the end, are the later years. Then those are the years for which, as I already told the court, we estimate NCRs are negative numbers. The Crown lost on their NCR account. Right? So the later years, our NCRs are negative. For the later years, we use a small share, even as low as 1% by the end. Notice the implication of that is that in the later years, when we use a small share, we are therefore including in our calculation a smaller share of a negative number. Incorporating a small share for those years, therefore, does not decrease the value upon which the amounts due to the annuitants is calculated. Take a small share of a negative, so we're actually increasing by using a small share for those years. We are increasing the value that's due, that would be payable to the annuitants. So just to review this, we don't use a 1% share. The years where we do use a share of around 1%, we are applying that share to negative NCRs for the purposes of calculating annuities. A small share of a negative is a small reduction, not a small increase in annuities. So these are very important distinctions, and I'm sorry that we did not write clearly enough in our original report for the plaintiffs to understand that. That's why I was at pains at the beginning to make the distinction between NCRs and annuities. And I want to add this point about the variable sharing and what it really implies. I'll be more explicit about this later in my testimony. I'll show you what the shares are year by year, compare it to what the NCRs are year by year.
When you use the word annuities and this distinction between NCRRs and annuities, you mean the augmentation too?
Yes,
That's right.
So what we calculate is based on our own approach to sharing, which we call the Vidal-Anderson approach.
Yes.
I'll talk about why. We calculate what annuities would have been in each year if there had been no $4 cap, if the augmentation clause were interpreted in the way the court says it should have been interpreted in the past, and our Vidal-Anderson model were applied to do that augmentation. When I say the annuities, I mean the total value of those hypothetical augmented annuities. And then, of course, we would compare that to what actually was paid in each year, which is either $2,000 as a lump sum in the early years or $4 per cap in the later years.
Right. So we're always talking about, whether it's you or generally in the court, we're always talking about what should have been paid over what was paid, which we're calling the augmentation. Okay, I just wanted to be clear in my mind when you say the annuities, you're
at the risk of making it less clear, I will say when I talk about the augmented annuities, I mean the total amount that hypothetically would have been paid in any year. And that in itself is above and beyond what was paid. Typically it is, but we haven't made that deduction yet. We don't deduct
That's
the
why
amounts that we're actually
I'm
paying.
I'm not talking about the augmented annuities. You've been using the word annuities, and I was trying to distinguish that from the augmentation,
Yes.
what's added to whatever has been paid.
So I might conjecture
Yeah.
that when Your Honor thinks about this, the annuities for you is what was actually paid. I will refer to that as the actual annuities or the annuities actually paid. If I say the augmented annuities or the hypothetical annuities, I mean the total amount that we think should have been paid in any year.
Okay. Thank you.
Please continue.
Next slide, please, which would be 22, I believe.
Okay, 22.
Still, but briefly, on the plaintiff's summary of experts' opinions. The plaintiffs simply failed to report our results. They did not report the numbers that came out of our calculations of our approach to augmentation. As I've said, we call this the Vidal-Anderson approach. It's our approach to value from the perspective of the Anishinaabe annuitants. And they didn't report the results of that. In their footnote, they did make mention of it. It said that it existed, and they wrote, quote, "The approach is a thinly veiled present day manipulation of the data to present a more palatable result." Obviously, we disagree with that characterization in the strongest terms. I will say for now that our approach will be thoroughly justified in my testimony. We will explain where it comes from, but I can summarize it to one sentence. We read the Vidal-Anderson report of 1849, and we implemented what that report said should be done to calculate augmented payments if payments were to be augmented in the future. We read what they said in the report, and we're doing that. So it's not a present day anything. It's the Vidal-Anderson approach. Now, when we do this computation, we take this approach, we can do it for different shares. So I want to make the distinction between the Vidal-Anderson approach to calculating augmented annuities from NCRs in any given year, and then the sharing question. We can put different shares of NCRs into our calculator to determine what the annuities are. And we do use all kinds of different shares. So the first question is the Vidal-Anderson approach appropriate? We believe it is, as I'll argue. The second question is, what share of NCRs should be used to support the calculation of the augmented annuities, should go into our calculations of that augmentation. And I'll discuss what I think we should do, but I want to emphasize that we use these different shares. And right, so any individual, or indeed this court, could have a view on shares and could hold that view independent of the question of whether the Vidal-Anderson approach is the correct or a viable approach to computing annuities from the NCRs.
Good. So you say you use the Vidal-Anderson approach to calculate the augmented payments. Then you said the next step was we applied different sharing models.
So the Vidal-Anderson approach, it's an algorithm, a computation, it's a rule to be used. And there's an input to that rule is what the NCRs are estimated to be in each year.
Okay, go ahead. I thought either from what I read in your report earlier, or just from my understanding, I thought the Vidal-Anderson report might have given you guidance on how to calculate the NCRRs only.
No,
Are you saying no, it's the share?
I believe the report offers the answer to the question of how we go from NCRs, which is simply a counting of
Calculation.
government's
Mhm.
revenue and expense, to annuities, which are the amounts that are paid to the annuitants. So NCRs are about the government, the crown,
Mhm.
and annuities are about payments to the Anishinaabe. And we believe the Vidal-Anderson report of 1849, as Your Honor knows, it clearly contemplated that some payments would come later and would be conditional on NCRs. It then went on to explain how the augmentation of payments could be done in the future, contingent on higher NCRs in the future. And that's what we've implemented in our Vidal-Anderson approach. Contingent on the NCRs. In that sense, you determine the NCRs, and then you determine the sharing rule for NCRs. You feed it into our Vidal-Anderson approach or rule.
Please continue, Professor.
Well, I'm done with this slide other than to say, if this document is purported to be a summary of experts' opinions, I think it's incumbent on the plaintiffs to correctly summarize, and they failed. In my opinion, they didn't do that. That's all. I have to say.
Then we move on to your third section, which you titled Nominal Value of NCRRs. So we start at slide 24. Tell us what's on this slide.
So in this section, we'll be talking about nominal NCRs year by year since 1850. And I'll start with the estimation methodology, and then I'll talk about the differences between ourselves and Mr. Hutchings and the results of those nominal calculations. And we'll proceed. There are going to be a lot of components to this, but I will say that, I mean, for the benefit of Mr. Hong and everybody else, I think we've covered many of the important issues. In this section, the differences, the distance between ourselves and Mr. Hutchings are relatively small. I'm going to propose to go pretty fast through this section on methods and gross crown revenues, because there's just not a lot of differences, but you will of course slow me down when you think.
You will, of course, keep your eye on our hardworking reporter. And she rules the time clock here.
Right. I will try to speak slowly, but not dwell too long on details unless asked.
Very
Thank
good.
you.
So methods for estimating treaty NCRs. That means NCRs within the RST area. Depends on the year. For the years 1850 through 1897, we use one distinct source. It's different from thereafter. For that period, we rely on an accounting of crown revenues and crown expense in the RST. Those documents, those tables of numbers, were prepared as part of the arbitration proceedings that took place in the late 19th century among Ontario and Quebec and Canada. We have access to those accounts through the Irving papers, and we use those data exactly. We don't make any changes to the numbers we see in the Irving papers, but we don't use all of them, nor does Mr. Hutchings.
Could you just explain what the Irving papers are?
Well, I mean, as I just said, it's this trove of documents. It's a FONS, I believe, at the Archives of Ontario, and it includes a wide variety. Irving was a government official that was involved in arbitration. In his possession were a bunch of documents that were relevant to the arbitration, not just the Robinson treaties elements of the arbitration, but others as well. And we rely on a very small subset of the Irving papers to do this.
Thank you.
So does Mr. Hutchings. He uses the same source. He uses really the same approach as we do here and does the same calculations for this period from 1850 to 1897, with two exceptions worthy of note. He excludes 1/2 of land agent expenses that are recorded in the Irving papers as part of the Crown's expenses in support of resources. We include 100%. That's a difference. It's not a hugely consequential difference. We disagree, but it's not big in quantitative terms. The second thing is the Irving papers record some expenditures on roads and railways that supported resource development and resource rents in the territory. Mr. Hutchings excludes all of those from his accounts throughout. We include the Irving papers road expenditures in our accounts for those years. We have different sources. We wanted to use consistent sources on railways for all years. So we also exclude the Irving railway expenditures for those years and substitute our own, but they're not the same, but they're similar. I'm going to discuss transportation expenditures later on in my testimony.
Okay. Next slide, 25.
So now we move forward to the second period, 1898 to 2019. In this period, we don't have the Irving papers, obviously, and we lack any accounting of Crown revenues and expenses, which is specific to the RST area. That's what Irving has that we don't. Instead, we have province-wide accounts from the public accounts, and we have to engage in an estimation exercise to apportion province-wide amounts to the RST area of the province. To do that, we develop what we call proxy measures of resource activity, of the geographic location of resource activity. So I'll use this term proxies. I don't know if Mr. Hutchings said the same, but he did the same. And so that process has 4 steps conceptually. The first is that we start with these province-wide measures of revenue and expense related to resources year by year from 1898 forward. That's province-wide in the case of Ontario's revenue and expense. We always measure that from the public accounts of Ontario, the official, and indeed typically audited financial statements. Excuse me, for the court reporter, typically audited financial statements of the government of Ontario. There's a few cases in which we incorporate federal expenses from the public accounts of Canada. And then, of course, we apportion it to the treaty area. So that's the first step, province-wide. Step 2, we get these proxy measures or proxy data on where in the province production of resources occurred or where in the province the Crown revenue from resources was collected. We do that in different ways for the different types of resources, for forestry, for mining, land sales, as well, water rental or hydro revenues, all treated differently. Typically, we find those proxy data, measures of the activity around the province, we find it only for administrative districts that existed in those particular years that were used, that were created for other purposes of the Crown. And then we have to map those administrative districts onto the RST treaty area as agreed by the parties. That's step 3. So we estimate for each one of these administrative districts that exist in any given year, we have estimates of the share of resource activity that took place in that area as opposed to the rest of the province. We then have to estimate the share of that district that was inside the RST. And we do that for each district. We add it up across all the districts, which gives us an estimate of the RST's share of the full province. Step 4 is to estimate the RST revenue. We simply take province-wide revenue as recorded in the public accounts. We multiply it by that estimated RST share from step 3. That's our proxy measure of where the activity happened. Multiply those two together. That is our estimate of RST Crown revenue from resources. We do the same thing for expenses. That's our estimate of RST Crown expenses to support resources. And of course, the difference between those two is net Crown revenues in the treaty area.
Slide 26.
It's more on geographic apportionment. There's really no difference. There are no important differences, perhaps with one exception, that exist between Mr. Hutchings and ourselves. To help make that point and explain what's happening, I have reproduced a figure from Mr. Hutchings' own report and his demonstratives here. I thought it was nice. It shows kind of a flow chart of how we do this. I won't speak about that. It's Mr. Hutchings' figure, but it describes what we do as well. Now, what about the actual data for these proxy measures? Here as well, we're almost on the same page. Mr. Hutchings and we do almost the same thing. We propose certain proxy measures for forestry and mining, and it is apparent from Mr. Hutchings' reports that he adopted virtually all of our proxy measures for forestry and mining. In turn, we adopted his proxy for land sales and land rentals. There's further question of hydroelectric. There's another expert, Mr. Hamill, retained by Ontario. He and Mr. Hutchings worked together, and I understand that they agreed on the apportionment of hydro revenues to RST as well. So virtually all of these proxy measures, very important step here, but we almost agree in all cases. And the result of that is that our estimated final shares that we apply to the province-wide accounts of revenue and expense are very similar. They're not identical because of small differences in methodology, but they're very similar in almost all years.
Little table on the next slide, slide 27.
Here's 2 tables over 2 slides to make that point clear. It's a little small on the slide, but I think it's helpful. So this is for forestry. These are our shares of stumpage revenues, averaged by decade since 1898. And that's the first column of numbers. The next one is Mr. Hutchings' shares for those same years, averaged over those same decades. And the third column is just the difference, just column 1 minus column 2. And so you can see that that third column, the difference column, they're very close to zero typically, indicating we have very close to the same share. There are a few exceptions. We're lower than Mr. Hutchings in the 1920s. Not precisely sure why that is the case, although I have some beliefs. Many years, it's 0%. We're exactly the same. Few years, he's higher than us. He's notably most higher than us in the decade from 1990 to 99, as well, the adjacent decades. He's got slightly higher shares there. I know the reason for that, so I thought I would highlight it. In those years, the 80s and the 90s, we have data on the geographic distribution of logging employment in Ontario from the census data. Mr. Hutchings chose not to use those data. So he literally has no proxy data for apportioning province-wide revenues between the years 1968 and 1997. We do have data for 3 census years in between. Both of us, when we don't have data, we approximate. We take a linear interpolation. We say it's kind of drawing a straight line between the points that we have to approximate the other years. Mr. Hutchings doesn't have any data from 1968 to 1997. He draws a straight line. We have data which is different than where his straight line ends up at. But even these differences are relatively small.
Okay, we'll move on to the next table.
Next one is the next most important revenue source, the mining profit tax. You can see here, we have almost exactly the same shares as Mr. Hutchings.
And this is slide 28. Okay, and move on to slide 29. What do we have here?
So in slide 29, some more particulars about the apportionment process. And here to think about, what matters, what this court might want to think about in the context of apportionment. I think it's important to know that we have similar techniques, but also to think about the quantities here. And so in this figure, I am presenting graphically the relative size of the different buckets of revenue that are in our accounts and in Mr. Hutchings. Well, these are our accounts, but he has similar buckets of revenue, although different numbers associated with in some cases. This chart tells you, what's important to think about here. And that's all proportional to the size of these blocks again. And so the point I wish to make is that there are just 4 categories, specific categories of revenue over all of the years from 1898 to 2019 that together comprise 91% of the total. And this is in present value terms, including interest, so we can compare across years. Half of it, virtually half of it, is this big green rectangle I've labeled dues, bonus, and stumpage. Today, we would just call that stumpage. So that's the Crown's main revenue from the harvest of trees on Crown lands. That's about half of all of our revenue. Next most important is the mining profit tax. Looks to me, I haven't checked the numbers, it looks to be about a quarter. Third most important is water rentals. Sometimes we would say hydroelectric revenues. And the fourth is revenues from the sales of Crown lands. That together, that's 91%. So if you get the apportionment right on those 4 categories, you're going to be pretty close on RST gross Crown revenues. And I'll just spend a couple of minutes on how we do it for stumpage, the big green box, and point out to you what sources that we have. And as I said, with one exception, Mr. Hutchings uses all the same sources. I'm not trying to dispute what he's done. I do want people to understand that this is an estimation exercise and it's not perfectly accurate, right? And to make that clear, I'll tell you what we did. To get these proxy measures of where the resource activity was around the province in any given year, our RST share, in other words, we first start with the census data in the year 1900. The 1901 census refers to activities in the calendar year 1900, and it tells us the volume and value of forestry production for each county of Ontario. In the north, they tend to be called districts. In the south, we call them counties, but you know how big they are. 1910, same, roughly the same kind of data source. Then we have nothing until 1931. In 1931, we obtained data, similar data on the employment in logging camps by administrative district of the Department of Lands and Forests. That just happened to be something they reported in their annual reports. So we digitized those data. We both used that as our way of figuring out where in the province logging activity was taking place. 1945 to 68, finally, we have some data on Crown revenues. So we know Crown revenues from dues, bonus, stumpage, and other minor levies on forestry. They're reported in the annual reports by, again, administrative district of the department. We use that. That ends in 68. And then we have very little information, but we do have logging employment again from the census for the years 1986, for the census years 86, 91, 96. Again, those refer to the calendar years prior. We use those, Mr. Hutchings doesn't. Finally, the best quality data here of all I've listed is the data that start in 1997, when the modern informational systems of the current Ministry of Natural Resources are available to us. And they report data not for the RST, but for forest management units. Stumpage revenue by FMU, Forest Management Unit. Those are, I'll show you exactly what they are on the next slide. And like Mr. Hutchings, we use an approximation for the years where we have no data. You can see we only have data for selected years. The other years we use an approximation technique. It's not the same as Hutchings technique, but it's similar in spirit.
Can you explain how did you use employment data to create your proxy?
Well, so in these cases, we don't have revenue and we don't typically have production values. But even if we had production values, I'd probably use employment as a preferred economic proxy. And what we're trying to capture is, as I said before, just geographic apportionment. Where in the province was the activity, economic activity taking place that gave rise to the Crown revenues? And so if we know that, if we estimate that 20% of logging lumberjacks were working in the RST area, then we believe it's reasonable to conclude that roughly 20% of the stumpage revenues were accruing in the RST area as well. That's what we did.
I see. So I noticed you don't have all the years listed here between 1900 and 2019. So for the years that are missing, is there no data at all?
We have no proxy data. We always annually, we have province-wide revenues and expenditures, but we don't have any information about geographic apportionment except for the years listed on this slide in respect of forestry. Mining is different, water is different, and so on.
Okay, I'm going to move on to slide 30. Okay.
So the several slides here will go fast. I want to make the point that, further make this point, that geographic proxies are not precise. The calculations we're doing are our best estimates, Mr. Hutchings' best estimates of RST revenue and expense. But there will be errors and there is uncertainty around these numbers. And those uncertainties are greatest in the early years because our data is most imperfect in the early years. It turns out that when you include compound interest to the present day, the early years are very important. They're not the most important years for RST in present value terms. Within the RST, I would put the peak of the logging industry, the mid-century, shortly after World War II, was probably the height in present value terms of when revenues were being generated in RST from forestry. But the years from 1900 to 1920 are very important as well. So we should look at, how good our proxy methods are for those years. I would call them crude because we only have data for large districts, and those districts don't really align to the RST boundaries. And so we're forced to make guesses. And I would suggest, as an economist, I want to give you my best estimate, but also a sense of my confidence in that estimate. And I would say for before 1945, the estimated RST revenues in our accounts or Mr. Hutchings really should be regarded as a rough approximation of the true values. It's our best guess, but we also must recognize the uncertainty around it. So here on this slide, this is 1997. These are the districts for which we have precise Crown revenue figures in 1997 and the subsequent years. And although it's a bit hard to read, I know you all have a paper copy, So I'm going to presume that you can.
It's no easier.
Fair point. So I'll just point out that here, each black district is an administrative district for which we have revenues. The outlined and shaded, so it's outlined in purple and then shaded in gray. That's the RST area agreed among the parties. And they don't align exactly. And so pretty good, right? So we can form RST as a sum of certain FMUs, because we know that FMU is inside RST. But then there are some that straddle the boundary. And one example would be Big Pick Forest, which was it's long been a very important forest within the RST. And I can't see it, to be honest, but I recall that something like 40% of Big Pick is outside of RST and 60% is inside. So those cases, now that's by
Is
surface
big, excuse me, is Big Pick Forest PIC?
PIC, that's right. And so that's the forest to the north and east of Marathon, Ontario,
Thank you.
from the North Shore. And so in those cases, we just look at the land area. We say, well, if I'm right about that, about 60% of the land area is inside RST. So we'll take 60% of Big Pick revenues as RST revenues and leave out the other 40%. So that's a reasonable technique, but it's only an approximation, even for 1997. Now, if we were to go ahead, if I may, to slide 31, you'll see that same process for the 1966 administrative districts in our data. So again, we have revenue for districts, which are not RST, but now the districts are much bigger. And so that Big Pick Forest, we don't have revenue data for it. We have revenue for Geraldton Administrative District, which incorporates Big Pick. But it incorporates a lot of other things as well. And quite a bit of Geraldton District, as you can see on this map, lies outside of RST. We believe, however, there was some logging out in the northern section of Geraldton District. We don't know how much, and we have to make an educated guess here again about what RST revenues were in respect of that Geraldton revenue.
So remind me again, the shaded part is the district?
Shaded, the purple outlined and gray shaded area is RST as agreed by the parties. The red outlined area here now is a Department of Lands and Forests Administrative District in 1966. And the annual reports tell us revenue for example, Geraldton as outlined in red. And we then have to take some portion of Geraldton and say, well, that was the revenue from Geraldton inside of RST. We don't take 100% of Geraldton revenue because we know that some of that revenue was in fact generated north of the boundary. And we have no data. We just have to make a guess about what that share of Geraldton that should be included in our accounts is. Mr. Hutchings does the same thing.
So this purple line, this is a general question. This purple line represents the height of land.
I believe it does.
Must be a big mountain there, Geraldton.
Long Lake is my guess. I believe that, Long Lake is a long and skinny lake in that region, and I believe it's roughly oriented on that axis, northeast to southwest. And I suspect it exists on one side of the height of land.
Thank you.
Of course, the other big blue dot there is Lake Nipigon.
Right.
Next slide, very briefly,
Slide 32.
shows 32 shows the 1944 administrative districts. My observations are the same. We don't know exactly RST revenues, but we do our best. Next, I'll suggest we go to slide 34.
34.
This shows, recall for 1900, we have the 1901 census data on the value and volume of trees harvested, but we only have it for, I'm sorry, I can't read my own slide numbers. I apologize. So we can talk about 34, but we skipped over 33. So Mr. Hong, it's up to you.
Oh, so let's go back to 33, just make sure we don't miss anything. Is there anything on here you wanted to speak about?
The points about 33 and 34 are really the same, but as long as we're going backward in time, to stop on the 1911 census, where we have data on forestry volumes and values for each of the black outlined areas now, which are census districts minus the specific census subdistricts for which there were separate calculations in the census. So you can see the districts got larger again, which means that the accuracy of our RST estimates got lower. And the most obvious one here is that we have data on our proxy for the Thunder Bay and Rainy River district. You can see that encompasses the whole left side of RST, plus a bunch of additional territory stretching really all the way to the Manitoba border and the boundary waters there, including Rainy River, obviously. So in that case, we know the share of provincial revenues, or we have a good estimate of the share of provincial revenues in Thunder Bay and Rainy River district, but we don't know what share of those revenues in turn were inside RST. We make our best guess.
Just point out, there's also a monitor to your left if there's something that's difficult to read on the big screen.
Good point. And I apologize. I wanted this information on the slides, but it's not big enough.
Okay, was there anything else you wanted to say about slide 34?
34, just very briefly, now for the 1901 census, our data encompasses all of what was then known as Algoma District. You can see that all of RST is now inside Algoma District. We have one share of forestry activity in our data, which represents Algoma share in all of Ontario. We then have to go from that to RST share, but we know that some of the activity in Algoma took place outside the RST boundaries. In this case, I would say we're doing nothing more than an educated guess about the RST share. And that applies because of our interpolation method to all of the years from 1898 up to 1910. It's all based on this map and this guess for forestry. And Mr. Hutchings does the same. I don't know a better way to do it. I'm not saying that our calculations are, well, I am saying our calculations are incorrect. We know that with virtual certainty, the number that we have assumed is incorrect. We hope that it's in the center of the range of reasonable estimates. But I do have to qualify my opinion based on the inaccuracy that's simply implied by the data that's available for this year, and make it clear that what we're offering is an estimate of NCRs, not the number for NCRs.
Okay, we seem to be moving to another subsection, so maybe this would be the time for the afternoon break.
15 minutes. Okay.
So if we move to slide 35, we have a new subsection. Can you take us through this slide, Professor?
Yes.
Sorry, slide 35.
We've talked about apportionment. The next step is to think about the province-wide crown revenues that we include as crown revenues from resources, and then included crown expenses, the expenses to support crown revenues. On revenues, again, very little difference between ourselves and Mr. Hutchings. I'm going to go fast. We include all resource charges for resources that we know about and that we find in the public accounts of Ontario. To the extent that those particular resources are known to have existed in the RST area. So for example, we don't include gas and oil revenues because we know there are no gas and oil resources in the RST. Otherwise, we include them. The main revenue items, as I said before, are stumpage and MPT, but our list is exhaustive of included resource revenues if they meet the definition above. So I've listed here other kinds of things. There's a more exhaustive list to come on a later slide. I will not read all the words on this slide, so please ask me if you want to know anything. I'll just say there are certain revenues from fees charged to producers in the resource sector. Fees that were not taxes, as an economist would use the term, but a fee for, it's a price for a service offered to the producers. We include those. We also include the associated expenses of the Crown in generating those services. And so they tend to be offsetting, at least to some degree. Sometimes Mr. Hutchings does not include the fee revenues in these cases. In other cases he does. It's a bit complicated in his account.
Can you tell us what assay fees are?
Yes, assay is a term used by mining professionals to mean the process of determining the value of the ore in an ore sample. It's a chemical test of one kind or another to determine the percentage of recoverable metal in the ore sample. Typically that service, that's an important part of mining exploration, of course. Typically that's in the private sector now, but in the early 20th century, the Crown offered those services to mining companies.
Okay, shall I move to the next slide?
Our resource revenues are based on the data we see in the PAO. That's our acronym for Public Accounts of Ontario. And they're fully consistent with it. We always defer to the data reported in the PAO as the accurate data. We include everything that's in the PAO and booked to the Consolidated Revenue Fund. That is booked to entities that are considered by the accountants to be part of the Consolidated Government of Ontario. Now that means excluding certain accounts, information about which is sometimes found in footnotes or other ancillary materials associated with the PAO. The most important example of that, revenues the government would report, but report as being outside the Consolidated Revenue Fund. Most important example are the special purpose accounts, which were set up to receive some forestry revenues and to undertake certain forestry expenditures. These followed from the named 1994 Act, which created the Forestry Futures Trust and the Forest Renewal Trust.
So those are outside the Consolidated Revenue Fund?
That's right.
Thank you.
The government considers them special purpose accounts, entities that are not part of government or which they do not have control. So a portion of stumpage revenue now goes to those trusts and is booked as revenue of those trusts and not of the CRF. The revenues that go into those trusts, as I understand it, having read their annual reports and the Act, I believe I've also read the Act. The purpose of those SPAs is to collect those revenues and then incur certain expenses associated with forestry activities, particular forest regeneration activities. Many are now booked through those trusts. And the result of that is that in our accounts for forestry revenues booked to the CRF, we do see a sharp drop in gross Crown forestry revenues around the year 2000 that is certainly due to the introduction of those special purpose accounts. We also see a sharp decrease in Crown forestry expenses around the same time, although not to the same degree. I would say that expense doesn't drop to quite the same degree as revenue does at that time, but they both drop in a very noticeable way.
Let's make sure I got this right. You exclude the revenues for these special purpose accounts, but you also exclude their expenses.
That's right. And their expenses, indeed. So none of this is in the public accounts recorded as either revenue of the CRF or as expenses of what then was called the Ministry of Natural Resources. Never recorded as such. It's outside the CRF, and so it's outside the accounting entities that the government uses for the main part of its PAO.
Thank you. Shall we move on to slide 37?
I'm sorry, these words are very small, no matter how you look at them, but I don't propose to read any of them to you. This is just a list of the various categories of revenues that we have in our accounts. is reproduced from our report, to give you a sense of what we're doing and what the province was doing for each period of years noted here to generate revenue. And you will see the revenues we've talked about and various other smaller revenue sources as well.
And how is this list different from Mr. Hutchins?
Well, Mr. Hutchins never provided a precise list. I did look through his original report fairly recently for that, and so I'm fairly confident in saying there is no such list. We have to instead infer it either from the words that he wrote in his report or by careful study of his work papers, which is challenging in its own way. But as I said before, mostly Hutchins and Bodway Smart agree on what Crown revenues are. Mostly it's the same. I would say that the departures, with two exceptions that I'm going to discuss next, departures are, if anything, we're more inclusive. We have more gross revenues than he does. For example, the fees for services that I mentioned before, sometimes he includes them, sometimes he doesn't. We try to include it all the time.
Okay, we'll move on to the next slide, 38.
So there are these two exceptions where we think that Mr. Hutchins has included certain revenues that we do not. And we think Mr. Hutchins is wrong to include them in his accounts. And indeed, we think that he is behaving inconsistently with the principles that he stated he was using when he does this. And I'll explain that. Well, in the first case, I'm going to talk about, Mr. Hutchins talked about this in stand, I believe. I'm going to talk about MPT revenue in the fiscal year 1935. Something we raised in our reply report and that he spoke about in testimony. Here, we think he's inconsistent with the PAO. He's using data, it just doesn't exist, that he invented. It's nowhere to be found in the PAO or indeed any supporting documents. So that's the first kind of inconsistency. The second one is, I'll defer until we get there. So although we generally have the same revenues, we think in this particular case, he has artificially increased revenue above what can be supported on the documentary evidence in the PAO. This is about MPT in the 1935 fiscal year. That was the year that the government changed its fiscal year end, which resulted in changes for that year in some accounting processes. The result is that there was no MPT revenue recorded in the public accounts for the 1934-1935 fiscal year. There was no revenue for that tax in the PAO. Therefore, we believe there was no revenue. The revenue was zero for that year. Mr. Hutchins didn't accept the zero, didn't accept there were no such revenues, and he double counted revenue for that year. He substituted for the zero, which we think is implied by the official documents. He substituted his own estimate, which is a weighted average of the surrounding years. Now, we raised that in our reply report. Mr. Hutchins did acknowledge, we think, in his reply, as we raised in our first report, in his reply to that, he did acknowledge that it wasn't in the PAO, but he chose not to correct the error that resulted from it. It is a consequential error. Using his interest rates, the number that he imputed or invented, the number he put in for MPT in that fiscal year, including his interest to the present day, is $526 million.
The income that you included is a number that with interest comes up to over $500 million.
No, I'm sorry. Our number for that year is zero because there is no number in the PAO.
Oh,
We
sorry,
believe
the number that Mr. Hutchins inserted for that year with interest comes to over $500 million,
yes,
just that year.
just that year, just that one thing on which we disagreed.
And why did you add interest there? Why did you add interest there?
Well, we have to add interest if we want to make these meaningful calculations. Right? The value of a dollar at some date in the past it's not meaningful to us sitting here today. And we should understand that we have to have a common unit of measure for talking about this. And that is present value. That's the bottom line in this case. It's present value. It's the only thing that we can all agree on the meaning of a dollar today. If someone were to say to you, I'm sorry, I lost some of your gold bars, but it was only a few ounces, only a few ounces. We would all understand that that was not a meaningful way to measure the loss, right? you would understand that each ounce of gold is very valuable and we have to convert that to dollars. I would ask Mr. Hutchings to think about what he's done in present value terms and not in nominal terms. And I'll return to that point later. This number is $526 million province-wide in his province-wide accounts, which simply doesn't exist in the PAO in present value terms.
See.
And it
Sorry,
was-
could
it
we
was-
get some clarity on what interest rate we're talking about?
As
Go
it
ahead.
stated on this slide, $526 million at Hutchings interest rates. The Mr. Hutchings interest rates, I mean, no disrespect, think about the Hutchings interest rates versus the Bodway Smart interest rates.
That's the 60-40 interest
Yeah.
rate.
We'll talk more about those interest rates, but yes, that's his
Okay.
preferred interest rate model.
And the nominal value of that year was 60 million.
No, Your Honor, forgive me, it is too many numbers. The 60 million is present value at our preferred, the Bodway Smart interest rates. So when I talk about present value, those are my preferred interest rates. I would put the value of this at 60 million. I went too quickly to talk about it. But you know, this affects his accounts.
What's the
Right.
nominal value for that year that
It's-
Mr. Hutchings puts in you compared to your zero?
I will, I believe it's around $500,000 in nominal terms in the year 1935.
Okay.
And I think we should focus on the nominal, the present value rather than nominal.
Okay, and you have a third bullet there.
Well, I don't want to make too big a deal. It's one number. This is the province-wide total. He doesn't include all of that 526 as RST revenues, but it simply doesn't exist. He should include zero. And so I do want to highlight this one number because it's an indication of a general principle. We have to rely on the data that are given to us. As economists, this is a very important principle. You don't play with the data, right? You're allowed to have certain assumptions that allow you to make imputations around the data, but the starting data should be sacrosanct. We don't touch them. That is a principle that I believe is adopted by my profession as an ethical standard, but others might interpret our ethical standards differently. But to me, it's important. Here, the PAO data should be the Bible, should be the received wisdom, and we start with those and not with invented numbers.
Well, Professor, how do you reconcile that with what you told us earlier about interpolation methods?
Well, you're absolutely right, Mr. Hong. It can't be an absolute principle here because we don't have enough hard data. We do have to make all kinds of imputations. And so I don't wish to suggest that Mr. Hutchings here has, I do wish to suggest that Mr. Hutchings has made an error here. If there's no basis in the PAO for the calculation, we never used. All of our calculations start with data that are in the PAO. We can point to you to a number in the PAO that was the basis for any imputations we did. In this case, that is not true. The starting point was Mr. Hutchings' imagination, in my opinion. Look, one could differ on this. I mean, I will retract that if I may, not I think formally, but I'll go back. Mr. Hutchings' starting point was not 1935 PAO revenues. It was 1934 and 1936. He added in a 1935 value based on what he saw in those adjacent years. That resulted in double counting. I shouldn't make such a big deal about it, but there is a principle here, which is that we start with the PAO.
Okay, we'll move on to slide 39.
Well, you can tell me not to go through this, but I want to demonstrate that there was no revenue in 1935 for this tax.
Feel free.
And it is kind of hard to prove a negative, we know in general, but in this case, I think we can. Not from the PAO, there is no number, not the zero that we use or the 500,000 nominal that he uses. You just won't find those numbers in the PAO. But this is an adjacent document. This is the excerpts from a table in the 1936 annual report of the Department of Mines, which was responsible for this tax. And recall that all of this is the result of a change in the fiscal year end. So the 1936 report of the department, the one that was published that year, reported results, revenue collections for the 1935-36 fiscal year and the prior partial fiscal year, 1934-35, they had to get caught up on fiscal years. They had to report data for those two fiscal years. So this is all from one particular table in that annual report that was spread over 2 pages, just taking screenshots of the relevant parts of the table for the 2 fiscal years. And I'll just take you through quickly from the bottom up, right? So the bottom of this table is the revenues they reported for the 1935-36 fiscal year. The fiscal year end changed from October 31st to March 31st. So that second fiscal year, therefore, is a new model. It goes from April 1st to March 31st of the subsequent calendar year. If you look at the bottom of that table, they have 3 taxes that they label as assessment taxes. Actually, I think formally, these are the 3 taxes that were levied under the authority of the Supplementary Revenue Act of 1907. So they're grouped together here for a reason. They're acreage tax, profit tax, and gas tax. Profit tax means mining profit tax. And you can see that for that fiscal year, there was 1,400,000 and some nominal dollars of revenues booked. And that number is from the annual report. But if you go to the 1936 public accounts, you see exactly the same number. Okay, so here, consistency with the PAO holds for that year. If you then go up in the table, we see the values for November to March, 34 to 35. Good idea. Again, there's an assessment section in the table. And you will see that within the assessment section for that fiscal year, there are only 2 values, acreage tax and gas tax. There is no value recorded for profit tax. And so again here, right, there's nothing that says profit tax is 0, but I think this is conclusive, right? The same officials in organizing their gross revenue data at the very same time and producing the very same report said, yes, for the 1936 fiscal year, we had MPT in the amount of 1.4 million. And for the 1935 fiscal year, doing exactly the same thing, they report nothing. And therefore,
Or half of the 19, is that a half year above?
it's all of that fiscal year, right? So Your Honor, previously, the end of the fiscal year had been October 31st. So for example, the 33-34 fiscal year was 365 days, beginning on November 1st of 33 and ending on October 31st of 34, and so on for the previous year. So with the fiscal years are 12 months. But at this point, they said, we're going to change
Mhm.
to make our fiscal year end the end of March.
Right.
They wanted to conform to, I think, what Ottawa was doing in its accounts, the federal crown. And so in order to do that, they either had to have a very long fiscal year or a very short one. They chose a very short one from November 1st, 1934 to March 31st, 1935. Okay. And the result of that is there was no MPT booked in those 5 months. It's an
Sorry, that's just what I was asking. You said, so for the prior year, there was nothing, but I'm saying it's a half year.
prior fiscal year was only 5 months, roughly a half of a calendar.
Okay, and
Period.
that, and I asked that question because when you say that by using the approach that Mr. Hutchings used, he double counted. And so you're saying that when you get to the end of the, what's that called? The March 31st, 1936 year, is that called the end of the 1935 year?
36.
It's called the end of the 1936 year. So when you get to the end of the 1936 year at 1.4 million, you say that would have included whatever was in 1935 that wasn't counted in the first half of, or reported in the first statements. And that's why it's double counting. Or
Every
is that what you're saying?
dollar in revenues that the Crown receives is booked to the PAO in respect of a particular fiscal year. In this case, some MPT revenues that were received were booked to the 1933-34 fiscal year because,
So the year ending 34.
right, the year prior to the one I'm showing you here, right? So there were some revenues booked in the PAO for that year. We go back one annual report of the department, we would see those revenues as well. Or they were booked, revenues that accrued at other times were booked to some other fiscal year, but they were never booked to the PAO for the 1935 fiscal year, this partial year ending in 1935. They never booked any, and I can tell you my conjecture about why.
So if I have your conjecture, which is, doesn't make any sense that it's zero in any particular year, if you're, I think, and there's revenue on both sides of it on this change of fiscal year, you're saying it appears that the revenue for that 1935 year is in one of the years on either side. But did you check to see if the years 34 and 36 were explainably higher than they might have been?
I did examine it for those purposes. We can't be conclusive about that, right? We
Okay.
can't imagine a kind of a but-for situation in which I'm not even sure the question is well posed, even though Mr. Hutchings framed it in those terms. It's important to understand that this tax was an annual tax. Taxpayers, if they were subject to this tax, were required to pay it to the government once a year. And at this time, I believe that the tax was due to be paid, right? It had to be. Now, April 30th is our tax date. For them, for this tax, October 1st was tax day. The payments were due by October 1st. And so you think about the payments that were being made during calendar 1934 by the taxpayers, those would have been booked to the 1933, 1934 fiscal year. They were received by the Crown in that year. Crown's practice at that time was to really use a cash basis. If we got the money in, we'll book it to the public accounts. They didn't try to apportion amounts across the period of time for which the underlying activity that was generating the tax was happening. We call that accrual accounting. We do that today. At this time, they didn't do that. They just used cash. So what revenues would the MPT have generated in fiscal 1933-34? Would have been the taxes that were payable by October 1st of 1934. Now think of those taxpayers. Roughly the same taxpayers then have to pay MPT in the next year. The law still says the same thing, independent of fiscal year end of the government. Says you must pay, next time you pay tax is by October 1st of 1935. And so those funds came in around October 31st, maybe a few weeks later. They were booked by the government to the fiscal year in which they received those monies. But when you look at it, that year was the 1935-1936 fiscal year. And they would have received essentially no revenues. I believe they received no revenues during the calendar months they considered to be part of the 1934-35 fiscal year, right? They got paid in October of 34. That was 33-34. Then they got paid again in October of 35. That was not 34-35. That was 35-36. And so so Your Honor asked a very reasonable question. I had to think about the answer. And I think it was prompted by what Mr. Hutchings said motivated his approach, but it doesn't make sense. The tax was paid once a year around October 1st. The fact that the government changed its accounting doesn't allow me to make up some new revenues that supposedly appeared between November 1st, 34 and March 31st, 35. There were no such revenues. If there were any such revenues, we would see it in the public accounts, and we would probably see it in this table, right? Why would we not?
Thank you.
So next slide, please.
Before you move on, so you talked about the public accounts of Ontario and your reliance upon them. Now, this is from the annual report of the Department of Mines. So is there a relationship between the annual reports and the PAOs?
Well, they're generally consistent, but they're not always consistent. We rely on the PAO and we supplement our information about what was happening by looking at these annual reports and other documents. Whenever there's any discrepancy between the other documents and the PAO, we always rely on the PAO. In this case, this is a case in which we then went beyond the PAO to read the extra documents to understand more. And of course, what I'm telling you here is in no way inconsistent with what we see in the PAO. But I do emphasize we regard the PAO, if you like, as the Bible, the authoritative source.
Thank you. Okay, we can move to slide 40.
This is just a second important way in which we differ on gross revenues included from Mr. Hutchings. And this is the logging tax, which was a tax levied by Ontario between 1949 and the early 1970s, but it actually does appear in the public accounts, as Mr. Hutchings says, for the period 1951 through 1980. Mr. Hutchings includes logging tax and we do not. We do not include it because the logging tax was in fact a replacement for corporation income tax on logging and forest products companies. Now, in our opinion, economic principles indicate to us that the corporate income taxes in general, are generally a tax on the returns to capital and not on the resource rents. And so this relabeling of the corporation income tax for the logging companies and forest product companies in these years as logging tax didn't change the economic nature of that tax as being corporate tax, a tax on corporate income, which is mainly return to capital. And so we don't include it. And Mr. Hutchings, in the introduction to his report, said he adopted this principle too. Income taxes should not count. And yet when he got to this tax, which we believe is just a relabeling of the corporation income tax, he included it. Now, I will note that the logging tax did apply, as I've said, I'll make clear, it applied to forest products processing, including pulp and paper and various wood products. Those are properly regarded as manufacturing industries, not primary resource industries. And so that's an indication it doesn't constitute Crown revenue to be included in the NCR accounts here. But even if that was not the case, even if we're only talking about primary logging companies, we would still exclude it because it was a corporate tax.
So I'm reading your second bullet here and the quote.
Well, the question I'm trying to answer here is, well, why would Ontario do this? Relabel its corporate tax as a logging tax. And the reason is very clear. They were trying to play a game to get more revenues, not at the expense of the logging companies, but at the expense of the federal crown. That games of that kind, of course, go on to this day. They're one of the favorite. They're common among Canadian governments. So let me try to explain that using this quote from a internal government document called Provincial Logging Tax, dated 1959, that we cited in our report. So what does this quote say? It says, Ontario introduced the logging tax to do what I said, increase Ontario's revenues at the expense of the federal government, while in fact reducing the taxes being paid by the logging companies. The quote says, the companies, they explain, we introduced this tax in 1949. The companies could treat our logging tax, 9% logging tax, as an expense for the federal corporation income tax. That means it was deductible. That was a deductible expense for the purposes of computing federal corporate income tax liabilities. I've left out a few words, which are on the next slide if anyone wants to read them. And so the companies realized some reduction in the combined amount of federal and provincial taxation they were obliged to pay. That statement says what I say. The actual taxes paid by logging companies went down. So what's the impact of this? The present value of the logging tax revenues Mr. Hutchings includes at our interest rates, 1.6 billion province-wide. At Mr. Hutchings' interest rates, I think it's $7.4 billion. When this issue came up in Mr. Hutchings' testimonies, he couldn't remember the number, so I went to calculate.
So this sounds a little bit complicated. Perhaps you can give us an example of how that works.
I mean, I can, even the example will be complicated, but I'll do my best if there's a desire for me to do that. So you think about a company that has $100 in income. Before 1949, before the introduction of this tax, there was a 7% provincial corporate income tax and a federal income tax rate that was around 50%. I don't know the precise rate federally, but around that. And so on that $100 in income, if it was considered taxable income, typically it would be, then the company would pay $7 in tax to Ontario and $50 in tax to Ottawa, the federal crown, for combined tax burden of $57 on the $100 in income. What happened with the logging tax reform of 1949? Now there's no provincial corporation income tax on logging companies. That 7% tax is gone. There's a new 9% provincial logging tax. And so on that $100 in income, the liability would be $9 in logging tax payable to Ontario. But that's a deductible expense. And so for the purposes of computing federal corporation income tax, income's not $100 anymore, it's $91. You get to write off the $9 you paid to Queen's Park.
And was that in the, presumably that's either in provincial jurisdiction that they could say that it was an expense for the purposes of federal income tax, or was that a cooperative, collaborative move as between the two crowns, or does it matter?
This was a federal choice. At that time, the federal government determined its own corporation income tax base independently of the provincial base. We're coming out of the World War II period where the federal government had occupied all of this tax room for war purposes. And so there were negotiations going on between the governments, but there was no coordination. The federal government had decided that resource levies of the provinces were deductible under the federal tax. There was no provincial forestry levy in Ontario at that time, and so no deductions before 1939. We had a corporation tax instead. As I understand it, the next step was that Abitibi Pulp and Paper sought to deduct its provincial corporate income tax payments under the resource deductibility provision of the Federal Income Tax Act. And so it wasn't prompted by Ottawa doing something or Queen's Park doing something. It was prompted by the taxpayer Abitibi. Then Ontario and the court found for Abitibi, they were able to deduct their corporation income tax. None of this is in my report, but it's my understanding, Your Honor. And that Ontario wanted to give this same treatment to all taxpayers.
Okay.
They introduced this new policy. So abolish the corporation income tax. In our example now, new 9% tax, $9 in logging tax, $91 in taxable income when it comes to pay your federal income tax. At a 50% rate, you're going to pay about $45 instead of $50 in federal tax. So combined tax is now 45 plus 9, $53 in tax. Whereas under the old system, it was 50 plus 7, $57. So combined tax paid by the taxpayer does go down in the example and in the reality of this program. Ontario's revenues go up and Ottawa's revenues go down. So it's exactly as described in this document. This was not a new tax on the taxpayer. In fact, it was a reduction in taxes paid by the taxpayer to some extent, but it was an increase in the revenues of the Ontario Crown at the expense of the federal crown.
Okay. Sorry, so this federal corporation income tax, is that rents?
But we don't think that corporation income taxes should be included as NCRs in this case, whether federal or provincial. And generally, the plaintiff's economic experts seem to agree with that statement. Now, I cannot make a categorical statement that none of the corporation income tax revenues ever have been sourced from, have been incident on, we would say, drawn from resource revenues. But mostly the income tax base is the return to capital. And mostly governments try to make sure that the corporate income tax does not hit resource rents, because that's what provincial royalty systems of various kinds are supposed to do. And so just as in the federal tax, the federal corporate income tax at this time that we're talking about, there typically are provisions in the CIT to make sure that the portion of income that we think of as resource rents is not subject to corporation income tax. In this case, they had a deduction. In other years, we've had a credit system for provincial taxes. More recently, Ontario to this day has something they call the resource allowance, which is just a special deduction we have built into our corporation income tax to make sure that mining companies get an extra deduction that non-mining companies wouldn't, representing the value of the resource rents. So I can't say categorically the corporate income tax never
Sorry,
generates.
just slow down just a tad.
I might want to draw a breath myself. I cannot say that the corporation income tax never taxes resource rents, but mostly it doesn't.
Was there anything else you wanted to address on this slide?
No, thank you.
Okay, move to slide 41.
This is the full excerpt from the 1959 report. I believe it's in your book of documents and that the plaintiffs have access to it. I don't propose to read it, but perhaps pause if anyone wishes me to, or read it if you want me to, of course.
So we've come, Your Honor, we've come to the end of the NCRR revenue section. This is the most natural break. I know it's been a long day, Professor. So I'm going to suggest perhaps we can break. We are ahead of schedule. And then tomorrow morning, Mr. Lipton will pick up the expenses part. So thank you very much, Mr. Smart.
Okay. So settled for tomorrow. Everybody's got their homework.
Yes.
All right. Thank you very much, sir. We're breaking for today and we'll reconvene tomorrow at 10.
Oyez, oyez, oyez. The sittings of this court have now concluded. Long live the king.